Hey there, I'm estate planning attorney, Paul Rabelais, and in this video, I'm going to explain what impact setting up a revocable living trust will have on your income tax situation. So this video is part 5 of a playlist regarding why Americans create revocable living trusts. Let's face it, taxes can be complicated. So many people hear tidbits of information about trusts and taxes, and these tidbits are often half-truths or they don't represent the big picture of trusts and income taxes. People hear things like trust save taxes, or trust tax rates are so high, or assets in a trust are not subject to tax, or if you set up a trust, you must be saving lots of taxes, or trusts are only for rich people who want to avoid taxes. So let's address the basics of trusts and income tax, particularly the most common type of trust, which is the revocable living trust. The revocable living trust is so common, not necessarily for tax purposes, but setting up a revocable living trust the right way can make it easier for survivors to access and inherit your assets when you pass away with little or no court or attorney involvement. So first, let's address the income tax consequences of setting up a living trust. Over the years, I've pretty much heard every possible wives' tale about living trusts and taxes. I've heard many times things like, Paul, I've heard that the trust income tax rates are higher than the individual income tax rates. I surely don't want to set up a revocable living trust if it causes me to pay more income tax. Well, we'll get to the trust tax rates in a moment. But the key income tax provision to remember when establishing a revocable living trust is that any income generated by a revocable living trust is taxed personally to the settlor of the trust, the person who set up the trust. So for example, if your trust contains publicly traded stock and that stock produces a dividend of $10,000 in a year, then the trust will neither file an income tax return or pay any tax, but rather the person who set up the revocable living trust will pay income tax individually on that $10,000 of dividend income. Furthermore, when that trust account which holds the stock is established, for example, at a brokerage firm, and the brokerage firm needs a tax identification number to establish the trust account, the Social Security number of the grantor will be used as the tax identification number for the account. At the end of the year, the grantor or settlor, whatever you want to call it, will get a 1099 showing how much income to report on the settlor's or grantor's personal income tax return. The technical aspect of all of that is based on the fact that a revocable living trust is, for income tax purposes, a grantor trust. You see, Articles 671 through 678 of the Internal Revenue Code define the grantor trust rules. If a trust falls under one of these provisions, then the person who set up the trust, referred to as the settlor or grantor or trustor, is recognized as the owner of the assets for income tax purposes. And since Article 676A of the Internal Revenue Code states in pertinent part that the grantor shall be treated as the owner of any portion of a trust where at any time the power to revest in the grantor title to such portion is exercisable by the grantor, then the tax on all income from assets titled in a revocable living trust is paid by the grantor. So now that we've established that a revocable living trust does not pay income tax, but rather the settlor reports and pays tax on all revocable living trust income, let's now address collateral issues surrounding trusts and income tax. So when a trust does pay income tax on trust income, the tax bite is significant. For example, for the year 2023, a married couple will pay federal income tax at the highest income tax rate, 37%, when that married couple's income exceeds $693,750. But in 2023, a non-grantor trust that accumulates income and is required to pay tax on the trust income must pay trust income tax at the highest income tax rate, 37%, when the trust's income exceeds $14,450. So a trust that does pay income tax hits the top 37% tax bracket when the trust has only $14,450 of income, while a married couple doesn't hit that top 37% tax bracket until they have $693,750 of income. But once more, since the revocable living trust is a grantor trust for income tax purposes, the income from your revocable living trust will not get taxed at those higher trust income tax rates. Hope that helps. Make sure you like, subscribe, feel free to comment, and we'll see you next time.